Hello, welcome to another video by Indicator Vault. This is Ronald, and in this video we're going to go over the easy Wolfe Wave here on TradingView. Let me just get the settings up real quick. Now, Wolfe Waves, they're a type of price action pattern that are great for helping determine as far your bias, as far as the direction. Maybe not necessarily great for entries, although you can use them some to find entries. In my opinion, there's other indicators that will help more with entries, such as the order block gen or supply demand pro. But for here, it's going to just help give you a direction as far as whether you should be looking for buys or sells. Of course, in this example, we have the bullish represented by the blue, so we're looking for buys. And one of the great things about Wolfe Waves is, as you can see here in the settings, the default has these on. So you got the target line. As I turn this off, you'll see this green trend line go off. And then you have the breakout line, which was this pink dashed line that you can now see is turned back on. So these are two very important angles or trend lines that help validate the pattern and take profit as far as this level right here. So as we can see just in this example, British pound, Australian dollar 4-hour chart, got the bullish wave has formed, and now as price breaks above this angle, just does it barely, but it does it with this candle, you get the blue arrow basically indicating that this is now valid for, the breakout up move. Obviously, we get a retracement, which is to be expected after a type of breakout, but then moves on up. And let me draw this angle out in time just to show you, how sensitive that is to price. As you can see, it never closes above it, just wicks above it a couple times and then drops. However, it does reach the take profit level. And again, confirm with the breakout, retracement down into this gap and flies back up. So this was just a bullish example. And now here we've got a bearish one. You can see the euro, US dollar, 15-minute chart. This bearish pattern is formed. We can see we've got the breakout with the red arrow here. And then clearly see runs through this line. But I also wanted to point out another, this doesn't just have to be the one take profit line to look for. Now, one thing I do want to point out is, first take profits. There are many ways to use this as far as finding precise levels to take profit. Obviously you want to have your stop loss typically above the highest point of the pattern. You can see it does come close here, but never gets above it. But one thing, the most recent low of the pattern, that is going to be a great place to take first profits. In this example, we have the bearish pattern. And so we're expecting a new lower low. Obviously, we don't know exactly how low it'll dip down as far as what these other lows it will take out. So a safe take profit 1 will be the first low. But let me bring a fib up here. Now, if you take the most recent leg of the Wolfe Wave pattern, so in this example from this low to this high, there's going to be some sensitive price points, and you want to kind of match these up with either recent lows or other order blocks or supply and demand levels in the past. So they're going to be the 127 618, and then you've got your second and third standard deviations. Now, if we look here at this other low, the next low, we have this low, then the low right before that right here lines up perfectly with the 1.27. And of course, we see price totally just tanks, goes right below it, right even below the second standard deviation. And then we can see how sensitive the third standard deviation was as well. As we see, just barely closes below it, just a few wicks, and then it comes back. And so this was a great trade. And again, entries can be formed with other indicators. They will be great for refining zones to trade from. But the overall bearish direction was spotted right here. You just wait a little bit and then totally tanks. So that's another bearish example here. Well, let me give you another example with the Australian dollar to the US dollar. And here, bullish example. And I wanted to show you this one as far as why some of these other take profit levels are important. For instance, looking at the most recent high inside the pattern. Not very clean price action in here, but you could technically have this as a demand zone since it broke the high before it. So maybe you got to refine trade into here. But as we can see here, the breakout line right there breaks above it. So we get the blue arrow confirming the breakout of that angle. And of course, we get a retracement, which is to be expected, and continues up. But however, one thing you want to note is sometimes the take profit level, you want to notice the angle of it. And again, this is a steep pattern. Obviously, it worked out in the sense it takes this high and, easily takes this high. But if you notice how steep the take profit angle is, this is why you also want to take partials along the way, right? Because if you're waiting for here, it never gets it before it tanks again. So that's why it's important to note these highs in the pattern to be even, other take partial levels. And let me pull the fib up again from the most recent swing of the pattern. See the 1.27? A little bit above this high, but it gets to it. Could have been a great, 3 take profit levels. Maybe this high, and then the 1.27. Still a great move, considering, if you got the best entry from down here, or even if, from here, still a strong move up. And now one more last example I want to go over. Got the British pound, Australian dollar, 3-hour chart here. This bullish pattern. Now, again, I want to reiterate, this is giving you a bias. This is giving you a direction. So, in one sense, as we can see, this low just barely. I mean, if you had your stop a little bit below it, you would not have been stopped out and caught the move. But let's say you were able to get in here, moved your stop to break even, comes back down. And yes, it does go to this first take profit level with the take profit line extended out, does go up into that. But there's still lots of room to the upside in this one, right? So as price comes back down here, it hasn't hit yet the 1.68, the second standard deviation, and all that. So there's still some bias for upside, right? And if you want to use, which I really prefer to use, supply and demand logic, there's no convincing breaks up here. There's wicks. For me personally, I don't really consider those breaks as far as validating supply or demand zones. But we finally have that here. A convincing break of structure of the high that created the low has now been broken. We still have lots of room to the upside. We don't have any bearish patterns that are formed yet. We just have this bullish one with, like I said, multiple price levels still to be hit. Let me bring that fib up again. Sure, the 127 does get hit, but look, comes back into a valid demand zone, flies up to the 1.68, almost the second standard deviation. An incredible R&R trade. If you just got in at the most conservative entry at the top of this demand, rode it just even to the next high, which, either this high and close enough to the 1.68. That's, just an incredible R&R trade. Next, I wanted to bring it up just to show you. If you just had your stop below the low here, entered at the top of the zone, held it to the 1.68, that's over a 5 risk to reward ratio. Great profits to be made there. And then you can just rinse and repeat. Wait for the next pattern to form and, analyze it. Wait for some breakout. Look for valid supply demand zones around the significant lows or highs. And you can catch some great trades that way. So this is the easy Wolfe Wave indicator with Indicator Vault. And I hope this video was helpful. And until next time, best of luck trading.